Hey, good morning, everybody. It's Monday, June 8th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. And you can join me each and every weekday morning, 9:30 a.m. Eastern Time on Facebook and YouTube as we talk about what's going on with rates and pricing. If you would like to join me live and you want to get a text reminder that I'm going live so you don't miss a moment of the show, you can sign up for that at hmmr.io/reminder or use this cool QR code over here. Also, feel free to sign up for our free daily email lock advice at www.ratelockadvice.com and our text service at www.ratetextalerts.com, where we send you out a couple of texts, one in the morning, one in the afternoon, and then alerts if we think there is risk of reprices better or worse. So go check those out. If you're here this morning, say good morning. Let's see, who do we, are you leaning on? You are. You're leaning on my keyboard. Stop doing that. Okay. Sorry. Sophia just stepped on the keyboard and none of my stuff is working. Give me a second. All right. Let's go ahead and say hi to the live folks here this morning. Everybody is jumping on. Good morning, Rob Stewart, Yasmin Martin, Megan Bissell, Randy Tico. Giddy up, sir. Amy Blauser. No Zane today? You Zaneless? Is it a holiday? Colin Jordan, Kathy Jensen, Angela Walters, Don Elbert. Good morning, all. Appreciate all of you being here this morning. Sean Segaloff, glad to see you as well, my friend. Hope you all are doing well. Kenny Rivard, good morning. Holly Johnson, great to see you. All right, so let's go ahead and get started. We're going to jump in. Let me start with a quick recap. What happened Friday, why rate sheets got a little bit abused and beat up. So quick recap, what happened on Friday here. Presentify. There we go. All right. So on Friday, as you can see, we had a big sell-off, this line going down right here. In fact, let me just zoom in on this so that everybody can see it nice and close here. Let me refresh this so I can scroll. All right. So right here was the brutal day on Friday. If we do a 5-day, you could really see this was Thursday right here. Okay. So we got Thursday up to this line, and then Friday morning, you could see big drop Friday morning. This was due to the jobs data coming in stronger than expected, 178,000 jobs created. Unemployment still at 4.3%. Markets, this is a much stronger reaction than what I was expecting. Again, I got caught with my pants down on this one. I know that some folks would have, we were talking about locking some things up ahead of time, but really there was not that much of a concern. The good news is we'll see a recovery from this. If you take a look, it's this big red candlestick right here. So when we're looking at the Japanese candlestick chart here, each one of these lines is a day. You can see this was Tuesday, Wednesday, Thursday, Friday, and then we go into the new week, Monday, June 1st, Tuesday, Wednesday, Thursday, Friday, right? So this is last week right here. And when you see a big, ugly red candlestick like this, we ended the day down here. And when bonds go down, that makes us have a cry face here. We do not like to see bonds go down on the day. So that did bring us down. I did expect to see some kind of a bounce back this morning, and we have. It's very, very minor, though. Mortgage-backed securities are currently up about 8 basis points on the day. But the reality is, look where we went. We went from 100.40. We dropped all the way down to 99.96. So we were down about 40 basis points. So we're already starting to, come back just a little bit here, 8 basis points on the day. Not enough to get excited about by any means, but it's something, right? It's a little bit of something here as we're moving in the right direction. And this is despite headlines of what was going on, Iran and Israel exchanging strikes, blowing missiles at each other. And this again, so much for the ceasefire that never seems to cease. It's kind of I don't want to say it's kind of funny, but it is ironic, that we have to see ironic. Get it? Ironic. It's ironic that we have to, we're dealing with this. So, but despite all that, we still have a situation where bonds are improved a little bit on the day. If we take a look at the 10-year Treasury yield, it's still above 4.5. We want to see it drop back below 4.5 where it was. It was 4.48, 4.5, 4.45. We'd like to see it stay below 4.5. after spending some time above it over here, we've spent most of our time below 4.5. So we'd like to see that 10-year drop below 4.5. Currently at 4.52. We would round it up a little bit here, and that's where we're at this morning. So other than that, as we take a look after the early selling on Friday that we did get right to here, bonds were flat on the day. Really no big change. So things were quiet. That tends to happen this time of year on Fridays. Now, rate sheets were much worse on Friday because of that jobs data. Take a look here. It went from 6.58 to 6.66. We should see some improvement today, both because bonds are better. We are up about 8 basis points for the 5.5 coupon, but also because we'll see generally after that big reaction to the jobs data, lenders tend to be conservative on that Friday pricing. And that was definitely what I feel was a market overreaction. As Ron Siegel would point out, markets tend to overreact on a regular basis. So it's kind of set up that way. Yeah, the school's out. That's right. I forgot about that. No school. So anyway, as far as reprice risk today, it's low on the day. I don't think we really have to worry too much about things getting worse from here. I think it should be a pretty quiet day. I don't think we have to worry about bonds selling off. The biggest thing going on today will continue to be what happens out of Iran. Oil prices. Oil is about $94 a barrel for Brent crude. That's what we're looking at. I mean, it's that's a lot cheaper than the $1.10 we were at. So hopefully things will continue to move in that direction and things will continue to work well. This week we have some, honey, you got to get off the, Sophia here is trying to get some love, but she keeps stepping on my keyboard. So we've got, what do we got going on this week? We've got CPI inflation data coming out. And we've got the producer price index data coming out. CPI inflation comes out on Wednesday. Producer prices come out on Thursday. We've got the consumer sentiment index on Friday. We've got treasury auctions this week. So there is some stuff that could help bonds to recover some more. I think there's room for more recovery. I would be floating for now. Again, anything that was already in a situation, I'm going to this is not the current lock advice. This is before I update it. But the lock advice had been, on Thursday was locking for anything closing the next couple of weeks. So hopefully that protects from that jobs data that came in stronger. I really did not expect to see as much of a reaction as we did. And then what this would change now. So that was what we were. Now I would be, cautiously floating. Give bonds a chance to recover. I don't think we're going to see any grand announcement that the Strait of Hormuz is opened this week. I think it's going to be more of what we continue to see, where things just drag on with Iran. I don't think Iran really wants a deal. They just want to, I guess they do, though, because of the blockade, and they're supposedly losing out on a lot of money because of that. We'll see. So neither side looks to be overly anxious to get a deal done. I mean, Trump did tweet for Israel and Iran to stop firing on each other. There's that. But other than that, we're kind of holding off here, waiting for things to catch up. Let's see what you guys have to say on this. Good morning, Candido Diaz. So watch the weekly ADP report. You can forecast what's happening. The monthly report's better than most other reports. Yeah. I will start watching that a little bit closer. That comes out on Tuesdays. What do you call a ceasefire when no one ceases firing? Exactly. Will Wall Street close early today so traders can go to Madison Square Garden for the basketball game? No, because even the traders can't afford the tickets. Even nosebleed seats apparently were like 10 grand. I don't know. So it just goes to show you, man, there's a lot of money in New York. A lot of money. Mamdani can shake him down. Maybe he should tax Knicks tickets, and then he could close the budget and do well. So Ben Stiller taking close-ups. Again, it must be nice to have that kind of money to sit courtside for this kind of stuff. I can afford the YouTube TV account so that I can have the high def. That's about what I can afford to be at those tickets. So anyway, and that really should be the question of the day. I would, you know what? I don't even watch the NBA anymore. I haven't watched basketball forever. I'll take the NHL playoffs. We got the Canes, baby. The Carolina Hurricanes are down 2-1 against the Golden Knights, the Las Vegas Golden Knights, who are, I believe, the reigning Stanley Cup champions. So we got the NHL Stanley Cup finals. I will watch those over the NBA finals any day. So, but we will see. We will see. All right, my friends, I'm going to wrap it up. Thanks again for joining me. Hope you all have a fantastic day. I will see you tomorrow. Bye-bye.